This is a download from BFM 89.9, the business station.
Good morning, Dodge. Justice Scalia just passed away yesterday. Do you think this will affect the election campaign?
Yes, Abraham, absolutely. We've already started to see the lines being drawn. We're going to have a choice made or not made before the end of the session for the Supreme Court, which ends in June. So, yes, I do expect this will change, and we've already seen it in the debates that went on Friday, and also Hillary Clinton's already come out. So, yes, it is definitely going to draw lines on both sides.
Do you believe that the check and balance system is baked into the U.S. system because of the Senate clearance and committees, etc.? Do you think this adds a layer of confidence to investors?
It adds a level of confidence with regard to the choice of a new justice and whether it will go through or not. Yes, because there are checks and balances. In terms of the market, no, because it's very political and there's very little confidence in our system, in confidence in our ability to make the right choices, because everything has become so political as opposed to dealing with the facts of life at the time. So in terms of this particular one, Scalia, the fact that he died very unexpectedly, it will create confidence that there will be some rational reasoning before a new replacement is voted in, and in fact, there may not be a nomination before next year, before the next election.
There are a few senators running for elections right now, for the presidential elections right now. Do you think they will see this as an opportunity to balance their campaign and try to put their arguments in choosing a new justice?
Yes, I do. I think it will be a very big part. As I said, we've already seen it at the presidential level, but we do suspect it's the Senate that's going to have to make a choice. If Obama does go ahead and nominates, it will be the Senate. Back in 1968, we saw the Senate blocking lame duck President Lyndon Johnson from appointing Justice Abe Fortas. And the fact that the maneuvers that occurred back then allowed President Nixon to make the appointments the following year, that could happen again now. It really depends on what Obama does. And what may happen, Obama, for example, might decide to pick a very recognized liberal whose rejection is guaranteed, but whose rejection will galvanize the Democratic voters to turn out for the party's nominee next November, and that would lead to the Democrats running for Congress being able to be in a stronger position to represent more of what the people want, and so therefore the politics will definitely enter both ways. On the Republican side, they may do what they did in 1968 and try to reason with the public that it should be the public who's going to decide, not the current Senate.
Moving along to the earnings seasons right now, we saw Express Scripts, a pharmaceutical company, planning to make their announcement this week. With a revenue of about $37 billion US, do you think that pharma will be a big industry to look at for Obama's final year?
Yes, indeed. In fact, they're announcing Tuesday after the close. The estimate's $1.56 versus $1.39 a year ago. But any news on Express Scripts' contract status with Anthem will likely outweigh any operational updates that the results announce. Public negotiations over a price check and the outcome of a current contract renewal represent the largest swing factor in Express Scripts, and this will obviously resonate with other companies in the industry. And it represents the largest swing factor in their near and medium-term outlook. So we suspect, yes, sales of $26.6 billion are expected in the fourth quarter. We expect earnings before interest of $1.9 billion. But really more important is what is going to be affecting the industry and whether or not their contract is going to be renewed, and if it is renewed, if there is a price to it. Apparently Anthem has sized the repricing event at $3 billion, and every 1% reduction in the price in Anthem's book of business could lower the earnings per share for Express Scripts by up to 14%. So that's really going to be the swing factor. The market will be looking to see what the announcement will be and what the repercussions are for the rest of the industry.
From pharmaceutical, we move to consumer. Dr. Pepper is also intending to present their earnings this week. We saw Coca-Cola presented a better than expected earnings. Will this be another surprise jump for Dr. Pepper?
Could be, but this is a much more positive piece of news. One of the things that's really driving it now are the dividend increases. Dr. Pepper has been increasing its dividend. We have another 10% increase as of February the 11th, up to 53 cents per share. Dr. Pepper has been gaining market share faster than its top competitors, due mainly to its product mix emphasis on flavored, non-cola beverages, which are outpacing cola-flavored drinks from now. They've also announced a new buyback authorization of up to $1 billion, bringing the total to $5 billion. So the news is much more positive. And yes, Pepsi did report really good quarter. Coca-Cola's had a good quarter, but Dr. Pepper it will be interesting to see if the market has factored in potentially good news into the stock already. It's running into some resistance short term at $92, and we'll see if we can get above that.
Moving from America to China, today we will see the Chinese market open after a week-long holiday following the Chinese New Year. And also, we saw some news coming in from the PBOC, where the PBOC governor actually has broken his silence and has said that there is no basis for a continued yuan depreciation. Is there justification to these statements?
Well, I think it's going to be supportive in the short term. There are several things to worry about in China right now. Official figures due out are likely to show exports have dropped for a seventh straight month in January. We also see that the data released on February 7th showed that the nation's foreign exchange reserve shrank to the lowest level since 2012 as the central bank sold dollars to combat a tumble in the yuan. So there are certain things to worry about, and we suspect that first of all, there will be a greater volatility in the first 2 to 3 days. Then I suspect that there will be some support, and then I think that the China markets will begin to experience the same bottoming process that other markets such as the U.S. have, and there will be support not only with the Chinese government but also with investors, and I suspect then after we get through the first day or so, where the move could be more to the downside than to the upside, then I suspect we'll start to see the bottoming process and much more of a positive bent.
You were mentioning that the support will come maybe in mid this week, but because of the regional indices performing poorly last week, the Hang Seng Index and the Nikkei actually took a beating last week. Do you think that the support will come far later than expected?
It will be later as opposed to earlier. We have to get through Monday and Tuesday. We really do have to see some kind of support before volume to the upside starts to move in. And really right now the emphasis will be on volatility and a catch-up of the China markets with the rest of the world. But we've seen some of the post-Chinese New Year reaction already in the H-share stocks. I'm hopeful people will keep calm about the A-share market, but I'm sure it will pull back a fair bit on the first day. After that, though, that's where the story becomes more positive. And I suspect by Wednesday or Thursday we will know whether the volatility will continue and perhaps be more on the upside as opposed to looking for a bottom.
We saw the Japanese interest rate, negative interest rate, sort of like have a backlash because of the yuan strengthening against the US dollar. Do you think this will affect how the Chinese will view interest rates?
Yes, absolutely. The fact that this has led a whole new possibility where zero interest rates are no longer the bottom, yes, it does, and it will have to be factored in. Tokyo was going along with other countries, but the fact that it's hit the Asian markets now, it will probably spread, or at least the possibility will spread across, and it will affect China and the stock market.
Thank you, Dodge. Have a great week ahead. That was Dodge Dorland, Chief Investment Officer of London Fuse Capital Managers in New York.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.